And this is the announcement of the Superstructure Trading Room. Okay, I want to welcome everybody in this early 9 o'clock morning here in Los Angeles, California. And just want to show some of the legal disclosures here. Trading is inherently risky. Trade with money you can afford to risk. And hello again, my name is Ken W. Chow. And let me ask you a question. Are you still struggling to make consistent money in your trading? How would you like to follow my live trades in real time? You'll see this entire process if you decide to join us. And the process is when I analyze the setup, as I place the order, place a stop, calculate the preliminary target, and manage the trade to taking profits. Now in this webinar, I'm going to show you a powerful way to trade without any lagging indicators. And I'm going to get back to how you can go to the trading room in a second. Now I trade pure price action. I don't use any of the indicators. And I'll show you later this week's superstructure trades in the crude oil and other markets like gold and the ES that I personally have taken. Okay. By the time you're finished watching this entire presentation, you'll learn how you can profit from following me as I call out trades in real time during market hours. Now, let me ask you, are you still using these tools in your trading? Moving averages, stochastics, RSI, MACDs, different types of bands, etc. Well, here's what is the first false data. Indicators can help you get winning trades. That's not true. Indicators are derived from price, and therefore they always lag. Do you know where to start looking when you want to put on a trade? Do you know how to confirm an entry? Do you know how to manage a position, where your target is? Without clear-cut answers to these important questions, you will not develop an edge to consistently win in the market. I'll now give you a simple chart pattern that will do that will answer these questions once and for all. Okay, now here is how a market may move up. You have a thrust up, you have what I call a pullback, a retracement, and then a thrust. Okay, this is the measured move. Okay, again, the measured move has this zigzag pattern, in this case going up. Well, a lot of times you'll have another one following it. This is just a pattern where there's two back-to-back measured moves. Now, you might recognize this as a five-wave Elliott pattern. Okay, this is an upward trending market, and so is this, and so is this. What's the difference between this and this? They're both uptrending markets. They're both showing higher lows, higher highs. Well, let's go back to the measured move. We'll say AB equals CD, but the real key is point C. Point C is very, very important. It is a pullback from B down to C, okay, against the AB leg. So point C, again, is the most important part of the measured move. Now, why is that? Because if the BC pullback is, let's say, a shallow retracement, assuming the AB equals CD formula to remain true, where would point D be? That's right, way up there, right? In this case, you have a shallow pullback. The bears are not able to push it against the AB leg as much as the bulls are rushing forward. Okay, so this will be considered a shallow retracement. Now, going bearish works the same way. Here, AB equals CD, right? Well, if point A is up there, making the BC bounce shallow, where should point D be to complete the formula? Way down there, right? Okay, so in the end, this is the premise of point C. This is the key point about point C. The deeper the retracement at point C, the weaker the trend strength. The shallower the retracement at point C, the stronger the trend strength. Now, I would use a 50% as a general rule. Actually, a little bit more than 50% is still considered somewhat shallow. But as a general rule of thumb, you can eyeball it and say, is it more than or less than 50%? So again, the depth of point C is very, very important. When you know this secret to the simple pattern, it'll let you be on the right side, the right direction of the market, going long or short. So the trend strength, the way I've seen it, is the truth. Okay? The proper application of trend strength is very, very powerful. Now, trend strength is not volume. It's not an indicator reading. It's a simple chart pattern. Okay? It's nothing but a simple chart pattern. Trend strength lets you know the quality of the initial trade setup, lets you know the quality of the trade at entry, and lets you know the quality of the ride when you're managing the trade. Let's take a look at some measure moves. Here we have a measure move. Here's another measure move. They're both showing deep retracements. Now, this is a bearish looking market. You're coming off of deeps, all right? And if you're coming off the highs of shallows, guess what? It's a bearish bias that is confirmed. Now, here's a series of up moves and a series of down moves. What are the retracement at these points C's going up and coming down? Well, shallows going up and deeps coming down. Which way is the bias? The bias is bullish, okay? As you're going up with shallow retracements and also coming down with deeps, you want to be leaning in the bullish direction, okay? So it's very important to have an idea as to which way you want to be leaning, okay? Otherwise, if you don't have an idea as to which way you want to lean, you may not be having a good thinking in the beginning, okay? So trend strength patterns are easy to learn, easy to use, consistently effective in all markets and in all time frames. Never get caught in a false breakout again. This is also very powerful if you want to do breakouts, right? You want to locate a high quality trade setup. Now, a high quality trade setup is great for picking highs and lows, or for trading a breakout. Okay, let's take a look at some examples real quick. You have some highs. This is a downward move and then an upward move, okay? This is the upside down version. Again, this is also down and then up. What's the difference? Shallows coming off the highs, deeps coming off the lows. Okay? How about this version? Can you quickly see the point C's here? That's right, deeps coming off the highs and shallows coming off the lows. This is a bullish bias, right? How about this? The deeps in both directions. This is what's called a sideways market because this is not showing any big move. It's going to be caught until some shallows show up, okay? It's not going to run away from you until something big comes through. Then you can look for clues. This is a conflicting situation. Picking highs and lows can allow you to enter the early part of the trend if you have proper chart patterns based on trend strength, okay? Here's the second false data. Trading with Fibonacci ratios is not easy. Well, the truth is there's a simpler way to unlock the full power of the fibs. Fibonacci ratios control everything in nature. All natural growth cycles and movements have these ratios in them, including price movement in all freely traded markets. Most traders don't trust Fibonacci ratios because there's too many fib numbers to deal with. They're not sure how to use fib clusters, okay? But I'll show you the most powerful Fibonacci ratios to trade market turns. Now, Fibs just got a lot easier because you only need two specific ratios to pick highs and lows if you know how to mix and match these two. This will never change over time. I'm going to show you what they are right now. Okay, it is a 261.8 extension and the more extreme 461% extreme extension of the BC range. I'm going to show you that in this week's charts, especially yesterday's trades on the crude oil short. This type of information allows you to pick an extreme point. Okay, there are several entry techniques, but this allows you to look at the overall bigger patterns and have a very good idea as to where the general bias ought to be, especially when things are fully stretched out. Again, nobody uses a 461 extension like I do because it's too far out there, but this is very, very powerful. Okay. So calculating highs and lows using Fibonacci ratios just got a lot easier. Okay. Fibs ratios effectiveness will never change and they never need optimization. So how do you pick a high or low accurately and safely? Here's how. We use a larger chart to determine directional bias. We use the medium time interval chart to get the zone to trade. Then we use a very small chart's trend strength pattern to confirm and adjust your entry. Okay, so the local trend strength patterns help you confirm a Fib combo and also will give you clues for adjusting the entry price. Okay, now let's take a look at this week's trades. Okay, so here are some of the trades that I've done for this week. Let's start with yesterday's trade. Now, this is the 5-minute chart on the crude oil market. Okay, mathematically, I've calculated the high at 95.02. The high was 95.07. This came at the opening bell. I did not short there. I waited until the bounce, and I shorted there at 94.83. Okay, and I had a target sitting there at 94.20. And again, this is something that was shown to everybody in the trading room way ahead. When this thing started to bounce, I was thinking 94.85, 83. This bounce here was a short to a bounce for a short to get to new lows. Now, why is that? Why was this a high to be shorted? Okay, I'm just going to give you a real quick display of the power of the extensions that we talked about. Remember the 461 we talked about, which is the extreme? Okay, this allows you to see how a lot of them together would be collaborating, if you will. These are all point C's of the BC range of the market. Okay, now take a look at the 461 and see where they are congregating, where they're averaging. Okay, in general, where's the general zone? You can eyeball the middle ground and see where they are. Okay, now this tells you that this thing could possibly be the high. So when it drops down and it bounces, you're going to show on that bounce to stop above this high. Okay. As it moves down, the target is 94.20, and why is that 90? Why is 94.20 the target? Well, let me use a 2-minute chart, and can you see a couple of 461s here extending down? Okay, this is what I'm saying. Now I got out at 94.20 because I don't want to be here now with a bounce against me. Okay, So these are the areas where, now there's a 261 as well, along with a 461. You have to know when to use what, okay? Again, you can look for confirmation and see whether there's some action at the 261 or whether there's going to be follow through, okay? Now here at the 261 of this guy, what did this guy just do? This is a lower high, lower low. This signals a downtrend in the making. When it pops here, there's a little bounce to the downside. This is where I mean by the 261 to 461. There's different ways of combining them along with other confirming patterns that will allow you to take trades in this manner. Now I'm going to show another day where, is Ron still here? Ron is one of the beta tester. Okay, yeah, Ron was there when I took this short, and what do I do, Ron? Here's what I do on the in the actual trading room. I say to myself, well, I'm shorting there, okay, and I have all these programmed in already, and I say to myself, oh, put a stop there, and I would say things like 94.20, boom, hang on, 94.20, I'm saying, boom, target. This is what you see, okay. Now, Ron, this is a repeat because he's actually one of the people in the trading room already. But by having this, and I actually would tell people, you know, something like 94.83. I actually, you know, have that there and target as the market is unfolding into the target, okay. So that's basically what it is that what I'm seeing. So these are, and then again, right at the opening bell, we had all that set up. Other things, other markets. The previous day was, you know, that was a 63 tick winner. I made a 7 tick later on. Yesterday was a losing day. I lost 11 ticks. Okay, I was buying over here, and that was one level. The actual level should be over here, but this level here did not give very good confirmation. I was a little aggressive here. Now, why? Let's take a look at. This was not hugely confirming, but I'm going to show you a bunch of 461s again. This is straight out of the book, but in terms of the trading room, you actually, oops, sorry about that. In terms of the trading room, you guys will actually see me drawing this out live, you know, in real time. And as I do that, you guys can, you know, I'll talk about chapters and verses in the book, and you guys can see how by averaging these 461s, this have a zone. Now this one was a little tricky because the zone here did not have anything to confirm it locally. Anyway, so that was the 461 on a bounce. Okay, look at this. Here's a deep retracement here, right? This was again 2:30 in the morning, very early in the morning, so I did not trade that one. But all by itself, the 461 had something going there, okay? So again, you'll see how this is actually applied in real time before price action gets there. So this is the way of the analyzing the quality of the pattern there, and so forth. Now, remember I talked about how deep and how shallow. I did not take this trade because I was kind of, you know, don't want to fight the trend. But locally speaking, 5-minute chart, look how shallow these retracements are. What does that tell you? All right. This is a breakout above this high because the pullback is so little and so little here. So there's a breakout that you could have done. You could have, you know, do a, like, you can be buying above there or buying above there on a breakout, and there should be follow through. Okay. Now, where would you be taking profits? You can average a pair of 461s, and somewhere up here, when the retracement got a little deeper and deeper, you can take profits there, right? So this is what we have. Let me show you the trade I took in gold. there's been a lot of shorting opportunities in the crude oil, but in gold, I had one. I'm going to show you those numbers again, okay? The 461s are not, they're not, you know, it's not a fluke, okay? And again, these are very deep retracements. To make a long story short, there's a whole bunch of them up there, and there are certain exact rules as to how to pull these things, okay? Because these are types of patterns that would tell a story. I'm not going to go into the details, but a whole bunch, you know, there's some averaging out to be around there. You can throw in a 261. This is the primary entry. I missed that one, but I got in on a secondary entry, which was what? When the market actually tipped its hand, meaning the market says, hey, I'm going down. Then this is telling you that you can short when it bounces up either here or here, okay? Because the primary entry was established already. Now, instead of picking the exact high here, you let the market roll over. And when it rolls over, you can short on a bounce, okay? So there's different ways to skin the cat here. Anyway, so this is this week's presentation. I also got in long on the S&P, but I didn't stick around too long there. The S&P also had this was a long right there at 1835 and a quarter. So this is a 5-minute chart. So I was actually, again, this was called out before price action got there. And again, I'm not giving any trading recommendations. I'm just showing you what I am doing, and people can either follow me on those trading entries or not, okay? So as it was falling, I had my limit orders there buying already. So this is the things that I use, and of course I would tell people, you know, like, I'll say, here's my stop, and then you can see the amount of risk and the amount of potential profit, and that's the kind of thing where it's very clear as to what it is that I'm telling you, you know, from what I'm seeing and from what I'm gathering in. Okay, let's go back to the presentation. So that was the look of some of the trades this week. I had a profitable week. It was some break-evens in the early part of the week, okay? Now, again, this thing works in all markets and in all time frames, effective in day trading, swing trading, and position trading. Now, if we're to be a really good trader, you need this triangle of foundation. You need the knowledge, okay? And that's I'm sharing with you some of that today. Now, this is an important thing over here, responsibility. This is your own your own thing. You have to be responsible, self-control, and be self-disciplined. Okay. Once you have that, then you have control of your future. What we're saying here is that you need a trading methodology. You have the discipline, and again, I'm not going to be able to teach this. Then you'll have profits. Okay. I'm going to attempt to teach this. Okay. The discipline. So I developed this revolutionary trading that lets me jump on high quality trades in advance. This has finally set me free. Okay. Now, is Gareth here? This is what Gareth wrote me. It was a real eye-opener when I found out about superstructured trading. Some of the most interesting things are the cleanliness of the system, right, and how it's based on element. He made 620 trading crude oil today. Gareth is here today, all right? He has my ebook, and he has a chance to see how it's done, okay? I have another student, pretty much a super trader. She started with $4,000 in superstructured trading, and she has built that over to $180,000 in 2.5 years. She only picks the most cleanest of trades. Now, I'll tell you right now, she outtrades me. She flat out outtrades me. Why? Because she's very, very disciplined and would say no to a lot of patterns that are not slam dunk. Okay, what she does is she trades the forex market. Okay, now here's her results: 80% winners. If you take these high quality trades, Ron and Eric and Chad and Eric are not here. You guys can see how if you take the clean high quality trades, they're about 80% winners. What she has is she risks about 25 pips on average to make over 100 pips in the foreign currency market. How does she do that? She actually trades in front of pending news. That's right. The news would normally turbocharge the move in her direction. Okay, and as some of you guys have seen in the trading room, some of the beta testers, you see how more times than not, when the crude oil inventory news hits the fan, more times than not, it'll go in the direction of this trade setup. So she's very aggressive. She does that with international news as it pertains to the foreign currency market. In other words, if some prime minister in Japan is talking, or something happens in Germany, like a equivalent of our unemployment report, that can move some foreign currency a lot, and she'll set herself up around the clock to take advantage of that. So having these 461 extensions, she was able to do that. Okay, I have another student who's trading hundreds of contracts, 200 contracts with the S&P, starting with one contract on the Russell several years ago. Okay, now here's what Randy says. He made 20 points today. These are the students I've taught this to, who has my book. Okay, Dan says he has another strong day. He pulled 30 points out of the market. This guy goes long and short. Okay, Neil, $4,500, where the 15-minute chart matched the daily chart. Now we're zooming out, zooming in, and therefore we can see how these charts can really have everything aligned for you. Okay. Tom says, my second trading day so far, he made 10.5 points shorting the ES. Okay, so this is a very, very, once you get the gist of it, very, very powerful system. Now, Tim Berkwin is a co-founder of the International Traders Expo. You might have gone to some of his expo in Las Vegas and other places. He knows a lot of traders with systems. He says Ken's the real deal. Tony, I'm sorry, made $27,000 in 1 week. Okay, very, very aggressive. He basically, now the market was very good for him when he had that, when he did that. Okay, but I'm not going to promise you you're going to make that much, but it's possible. Now it's time you can break free, financially free, emotional free, and physically free. Once you understand some foundational patterns that you can use in trading any market, okay, you can learn my proven 3-step process and have the life that you deserve, to provide for your family and all the things they deserve, and to accomplish the things that you've always wanted. Okay, now I call this methodology superstructure trading, and some of you guys have the book, some of you guys have understand the concepts of it, but it's finally here. Okay, the SuperStructure trading room. Okay, this trading room, you get access to live trading 5 days a week from 6 in the morning to about 11 o'clock Pacific time. I take breaks in between, but that's 5 hours of having access to me being on the air. Now, usually there's 1 or 2 or 3 trades during the day, so it's not like you're going to take 15, 30 trades a day in and out. Okay, but every trade is explained and well thought out. If not, then those will be the cowboy trades, and those are the ones that you either be careful of or know your risk. Okay, so I call out trades in the crude oil, gold, and sometimes the ES as well. Plus, during the 5 hours of me looking for a trade and all that, I'm going to start giving valuable trading tips. Okay, this is new. I'm going to start talking about controlling emotions. Emotions are very, very important. I haven't been talking too much about it. Now, Sunny, who's been out trading me hands down, her emotions are just rock solid. Okay, tools for a healthy mind. Again, I'm going to talk more about it because it's not just patterns. It's about controlling your mind. When there was a time in my life when my mind was simply not working very well. No matter how good the patterns are, somehow you'll shoot yourself in the foot. Okay? So, and you also need to pretty much improve your overall life. You want to be happy. These are valuable trading tips that I'm going to give. I'm going to start giving throughout the trading day as we're waiting for patterns to set up. Okay? Plus, I'm going to give you a powerful confirmation pattern not revealed here or anywhere else. It's a pattern that Ron saw that pattern. So did Eric in chat. It's a very powerful pattern. It is not my pattern. Okay, it is not a superstructure pattern per se, but it has a lot of power behind it when used properly. Okay, so these are the tips and all of that you're going to get in the in the trading room. Okay. Now, the value is $247. Now, if you want to learn my complete trading system, you can learn it. And the way you learn it is you can attend 3 educational webinars a week, 12 per month. These educational webinars is where I disclose all of my trading secrets. Okay? These, all the patterns, all the rules are explained in details here. Okay? Now, these are the time of the webinars, just for your information. These are all in the afternoon after the market closes, Pacific time. I'm in California, in the U.S. Okay, so you can get to attend these 3 webinars and the schedule, along with attending the early morning trading room. Well, we'll talk about that. Will allow you to really learn it. Okay, the 2 together will be very, very powerful. Okay, now all these sessions in the in the webinars are recorded and archived in the membership site. Okay. Again, this is valued at $247 a month. So you can learn it by coming to the webinars, or you can come and see how the trades are performed real time in the trading room. Okay. Now you might be asking how much. Well, again, the trading room is $247 a month. The 12 educational webinars per month is $247. So together they're $494 a month. Okay, but as an introductory offer, guess what? You can get both for only $247 a month. That's right. Instead of just coming to the trading room and then pay separately to the educational webinars, you can get both for $247 a month. But as they say, there's more. Now, again, this is the debut of my trading room, and I talked to my marketing people. We discussed this over with Rick and the other people, and as a promotional offer, you can sign up for 1 week for just $9.99. Okay, and then you can stay for $247 a month. So after the 6th day, it'll say, look, do you want to stay? If you find it valuable, it'll be $247 a month. So both are only $247 a month. But for a limited time only. Now, this is something that I was not sure if I want to throw out, because this is really giving away a lot for, a lot of value. I'll knock off $100 off the first month after your trial is over. This is only for you guys. Okay, pay only $147 for the first month. So to recap, the first week is for $9.99, and this is the controversial part. After that, the first month is $147, and every month thereafter, $247 for as long as you want. You can cancel any time. This is pretty much an offer you can't refuse, because by the time you watch the webinar for a week, you'll see how much value there is. And I'm not giving trading advice, but for this amount every month, you'll more than make up for it when you see the clarity of these winning trades. Okay, so to get started, to get in, superstructuretrading.org/trading room. Now we're limiting this to about 30 people right now, only because there's a lot of questions and answers that I need to go through when people start understanding and learning and so forth. So not to be overwhelmed in this first phase, we're opening this to 30 people. So if you want to sign up, you can go ahead, and if you have any questions, email me at ken@superstructuretrading.com. Okay? So if you have any questions, just email me. If you want to get started, this we'll take the $9.99 on a credit card and it'll roll over to, we tweaked it to $147 a month. And then after that, it'll be $247 a month there from that point on forward. Okay. All right. So I'm going to take questions and answers right now, and if there are any, let me scroll up to this thing here and see if David says, wondering how this would apply to intraday trading equities. Pretty much the same way. Equities work the same way. Patterns are patterns. I just like the volatility and liquidity of the crude oil market. We rely on indicators for multiple confirmation to falsely appease ourselves of the trade. Yeah, that's true, Eric. Okay. John says, do you have a link to your track? I don't have a track record yet. I'm going to start keeping track. So far, every week's been profitable since January. Still believe it today again. Very true. Yeah. Gareth says, these patterns are very, very good. How to use 3 time frames as you told. Well, what we do is we zoom in and zoom out in time interval charts. I always do that. I nonstop do that. Okay. And if you were to do that, you can zoom in to see the details, and you can zoom out as well to see the bigger patterns, as to see which way the wind's blowing. David says, looks easier to apply than all the GAN stuff I've studied. It's a version of, it's a spirit of GAN, David, but it's just trend strength. And what we're trying to do is catch that small segment of the move that's predictable. That's it. Okay, we're not investors. And that's why trading futures and Forex makes sense, because of the high leverage for you to zoom in on that one leg only. GAN promises to pick a high or a low for the year and to ride out all the things in between, or something like that. I'm trying to pick local highs and local lows for a little, move, hopefully with the trend or against the trend if the trend is weak. Okay. The guy who makes $200 in 1 week, how many contracts was that? He was trading 5 and 10. Okay, he basically was pyramided up on a strong. It was a down. That's what during 2008 when everything was falling. Not just the S&P and the Dow Jones, crude oil. I mean, corn and cotton and sugar. A lot of things were falling as well. The guy who made 27 grand back in 08. Okay. Tony, he was a police officer, former police officer. Michael says, I currently trade overseas in the capital for high net. May I speak with you by phone this afternoon regarding a potential joint event? Yeah, if you want to. Can we pay by PayPal? I have to talk to my my guy on that. I'm going to talk to you about that PayPal, David. Doug says, time is valuable. Do you have proof of concept? You have a list of your trading history in your website, trade by trade. I don't do that, okay? But that's why we give you a 1 week so you can see how things are. 1 or 2 trades a day. Sometimes there are no trades a day. Sometimes there are 3 trades a day, okay? Sometimes I would miss trade in the gold while I'm looking at the S&P, okay? That happens. So Mariano says, I would need to get started first week of February due to, okay. Yeah, of course. Just email me, Mario, no problem. How much scripts would a trader trade? Scripts. You talking about how many contracts? Scripts. I'm not sure what scripts are, Kamal. That's not a term here in the United States. Anand says, how would it apply to an Indian market? The patterns still are the same. You can still, well, again, I follow the American markets on the crude oil and whatchamacallit, gold in America. But any pattern would work. I don't trade the Forex. I know Sunny is knocking it out of the ballpark, and she regularly makes 5,000, 6,000, 3,000 per trade. But her trades are 2 or 3 days, like swing trade or something, and it works in that regards. She has very weird, yen and Canadian dollar pairs and pairs that I've never even heard of, but they also work. I tried signing up and clicked the button and got. Oh, okay. You have an order? SuperStructureTrading.org/ Okay, email me and I'm gonna have that fix that for you, Vipal. Okay. How would you have traded the NQ yesterday? I did not look at the NQ patterns. I'm gonna look at that after we're done. Okay, Michael, I'm gonna email you my number, Michael. Okay, I'm gonna have to talk to my tech guy, guys. Okay, David. And Paul, I'm going to check that out too. You can always email me and let me know, and I'm going to help you guys get in. The tech guy was working on this over the last few days. There's no, we're not using PayPal yet. The tech guy, Rick, has this on my website. Can you expound on the deeper retracement at point C, the weaker the trend? Okay, the thing is that point C is a pullback against the trend. The bigger the pullback, the weaker the trend. The pullback is a counter trend move against the trend, and therefore with the trend, it is a lot more stronger if it's shallow. Oh, how much stocks are traded trades? You can trade as many shares as you want, I guess. Okay, but let me check on that, Vipal. Okay, on this thing. We need Sunny. Yeah, Sunny basically trades around the clock, right? Because she's she doesn't stick with any particular time interval chart. I'm gonna have to talk to him about this trading room and see what happens. Okay. Can you shed some light on the Fib combos you mentioned? Oh yeah, the 461 is the most extreme of the Fibonacci extensions. If you have a whole bunch of them congregating in one area, then what you have is a place that's it's going to hold tight, and it's going to reverse. Okay. Okay, I'm going to stop recording now.